happy Wednesday. Before I get started, happy birthday to Wee Junwei, the co-host of this call, okay? Yep, it's his birthday. Okay, now back to BOJ. So I think it was around like 10 minutes ago that the Bank of Japan just released their monetary policy decision, okay, announcement. So basically they held monetary policy unchanged, okay, interest rate unchanged at negative 0.1%. QE continues at whatever amount they were purchasing previously for the Japanese government bonds and so on and so forth. Okay, so basically nothing special, nothing new coming out from the Bank of Japan. Okay, the next meeting next month, okay, may be a little bit more, I would say, interesting. Okay, because that is when the central bank will be providing their economic outlook, which is something like the projection materials that the Fed will be releasing this time around, or some quarterly outlook, even providing us with their forecast, okay, economic forecast. So yeah, for now we will just have to see how it goes, and yeah, just take it as it is from the Bank of Japan. All right, so that is for the Bank of Japan. Now, moving on to something more interesting, all right, we have the US Federal Reserve, okay, that will be announcing the monetary policy decision, okay, tomorrow at 0200 GMT plus 8, okay. So what to expect? This time around, the focus will be on QE tapering, okay. Specifically, will the Federal Reserve be announcing a QE tapering, okay? Personally, I don't think the Fed is going to be announcing a QE tapering. All right. Instead, the Fed may deliver a hawkish note, okay, similar to the one that Jerome Powell made back in the August Jackson Hole Symposium. Okay. So what did he say previously that made his speech to be hawkish? Okay. So he mentioned this. I quote, substantial further progress test. Okay, the substantial further progress test has been met for inflation. There has also been clear progress toward maximum employment. Okay, so that was what he said back in the symposium. All right, this time around, yeah, I'll expect the central bank to actually reiterate something along the line of this as well. Okay, because I mean, it's the fact, right? We have been seeing from the releases of non-farm payroll data, okay, it has been strong up until the most recent one, okay? Inflation has been strong up until the recent one as well, okay? So that brings me to the next point. Why is it that the Fed, okay, is unlikely going to announce QE tapering, knowing that Jerome Powell has already said that, that the central bank is actually expecting a QE tapering to take place in 2021, okay, by the end of this year, okay? Well, basically it's because of, first of all, it's because of the disappointing jobs report, okay? 235,000 jobs were being created in the US for the month of August, as opposed to the 720,000 jobs forecast, okay? So it's just like a 33% of the of what was being forecasted. So that is the first point. Second point being the recent slowdown in inflation. Okay, I think it was like 0.3%, okay, increase in inflation back in August on a monthly basis. All right. Yeah, although in terms of annual inflation, okay, the data is still way above the central bank's target. So another comment made by Jerome Powell back in the symposium will actually, give us a clearer understanding of why these two pieces of economic data may actually put the central bank on hold for a little while, okay, for in terms of announcing QE tapering, okay. So once again, I quote, he said this, I quote, "We have much ground to cover to reach maximum employment, and time will tell whether we have reached 2% inflation on a sustainable basis. Okay, so as we already know, okay, the Fed's dual mandate, maximum employment, and price stability, which is referring to inflation, okay, are the main goals, okay, of the central bank. All right, so employment wise, they have a long way to go, okay, before they reach maximum employment. Inflation wise, okay, yes, there may be strong inflation coming in previously, okay, prior to the August data, okay, but what they want to see, what the central bank wants to see, is that inflation will be sustainable, okay, not just like a few months of spikes and high inflation. They want it to be sustainable across the projected horizon, okay, the projection horizon, okay. So yeah, these two, the most recent release of the employment figure and the inflation figure may actually put the central bank on hold, okay, in terms of making an announcement on QE tapering. Now, another reason, okay, and a third reason, all right, a third reason that I personally feel may actually add on to what I've said just now, okay, is that it may actually be worth it for the central bank to delay their tapering announcement by 1 month. By one more meeting, okay, because the next meeting will be held in November, which is around 2 months from now. Now, in these 2 months, the central bank will be receiving 2 more jobs report and 2 more inflation reports, okay? So that will actually give the central bank, way better view, way clearer view of whether, a QE tapering in 2021 is warranted, okay? Now, if they were to make an announcement, a tapering announcement in November, then tapering is likely going to start in December, right? Okay, so they will still be able to get in time for to justify the tapering in 2021 to take place, okay? Okay, there's another thing is that for non-farm payrolls data, all right, the jobs report, based on historical data, okay, there's usually a significant revision, okay, to the number of jobs being added, number of jobs being created, okay? This is because data collection tends to be a bit, I would say, due to tons of discrepancies, okay, in the month of August, because of people going for summer vacations, okay, that actually, can actually lead to substantial revision. Now, if the data were to be revised upwards, okay, the August figure were to be revised upwards, then of course that will be, that will be strengthening the Fed's conviction, for a tapering this year, right? I mean, for the month of July, okay, we have seen an upwards revision in data. Okay, I think it was 900 over 1,000 jobs being revised upwards to 1 million. Okay, even for the month of June, we also see like a decent amount of upwards revision. Okay, so if we were to see, another round of upwards revision for the August figure, then things may not be as bad as it seems. Okay, so because of all these reasons, the Fed can afford to wait for one more meeting, all right, for the November's meeting before deciding, if, an official tapering announcement should be made and, should be started in December, okay? Now, that is for the tapering side of things. Also take note that the quarterly economic projection materials will be released, okay? What to pay attention to. Now, although we are paying attention to although the main focus this time around will be on QE tapering, but also note that interest rate hike is important, okay? Yes, we are not going to be expecting interest rate hike anytime soon, but, okay, we would like to pay attention to the dot plot that comes with the projection materials. Let me show you how it looks like. Okay, so this is the Federal Reserve page. I'm just going to paste this link later on. Okay, so you guys can know where to look for the statement and things like that. Okay, so if you guys are staying up for the FOMC meeting later on, tomorrow at 2 a.m. All right. Then come down to July. Sorry, come down to September. Okay, come down to September. And at 2 GMT plus 8, they will actually release, and then you can click on the PDF, the HTML, and things like that. All right. For readability issue, okay. For the statement, you guys may want to opt for the HTML version instead. Okay, it's easier to read. Okay. For the projection materials, okay, I would prefer you guys to go for the PDF version, because the PDF version will show you what I'll be showing you at the moment. Okay, the dot plot, which will not be clearly displayed for the HTML version. All right. So if you were to click on the PDF version for September, all right, later on you guys will be clicking on the September version. You guys will be seeing the PDF being loaded. All right. Wow, that's long. So, summary of economic projections. Now, dot plot. You can just scroll all the way down until you see, okay, I think I missed it. Yes, this is the one. It's the only page, okay, in the projection material that has tons of dots, okay, on this plot called the dot plot, all right? So what this shows is basically, you know, for 2021, just zoom in another, yeah. Okay, for 2021, for 2022, 2023, and the longer run, okay, long term, okay, how many members are actually expecting interest rate to be at, you know, the respective level based on the axis, okay? 0%, 0.5%, 1%, 1.5%, 2%, so on and so forth. So what happened previously in June, okay, during the release of the projection materials is that there were actually many people, okay, there were actually many committee members who actually voted for, well, not voted, but projected that interest rates will be higher, okay, in 2022 and 2023, okay, there was a shift. So previously, I think there was somewhere around 14 or 15 dots, okay, 14 or 15 dots around this region, okay, which right now you are looking at only 5 dots, okay. So that was actually, that implies that, you know, about 14 or 15 members of the committee members are actually expecting interest rate to be less than, okay, or equals to 0.25%, okay, in 2023. Okay, that was previously. Then in June, okay, you know, we are seeing only 5 dots. Okay, the rest actually shifted higher. So that means there's an expectation. Okay, there's an expectation that interest rates will be higher in 2023. Okay, so this time around during the meeting, when the projection materials is being released, this is what we want to pay attention to. Will there be any further shift from, you know, from bottom to the, from somewhere at the bottom to somewhere higher, okay, which is, I would say, which translates to a more hawkish view coming from the central bank? Or will there be a downwards shift, okay, of the dots somewhere around here, okay, to the first row over here, okay, which will translates to a more dovish view coming from the members, okay. But that's for 2023. Look at 2022, okay, with tapering talks going on, you know, tapering may take place this year and things like that. Somehow the market has already been focused, okay, the focus of interest rate hikes has already been carried forward to 2022. Okay, right now we are seeing, I can't count, okay, this is just too many dots over here. Okay, right now we are seeing like more than 10 dots, you know, indicating that members, more than 10 members are actually expecting interest rates to be less than or equals to 0.25% in 2022. Wow, there's only like 2, 4, 6, 7 members expecting you know, interest rates to be higher than that level. Okay, if we were to see a shift from here, okay, to anywhere above, okay, then chances are we will be seeing a more hawkish Fed. Okay, the Fed will be delivering a more hawkish tone. Okay, so that is for the projection materials. Okay, and another thing that the projection materials will come with, okay, is the economic projections. Okay, will the central bank be revising, okay, the GDP projections, inflation projections, employment projections, specifically unemployment rates, okay, upwards or downwards? That will also correspond to whether the central bank is hawkish, okay, or dovish. Of course, upwards revision in inflation and GDP translates to being more hawkish, okay, and a downwards revision to unemployment rate translates to more hawkish as well, okay, vice versa, all right? So two things to pay attention to when it comes to the projection materials, okay? Yeah, if you guys are trading this FOMC meeting, just take note, it's very, very likely that volatility will come from all directions, okay? Especially at 0230 GMT plus 8, just 30 minutes after the release of the announcement, because Jerome Powell will be speaking at a press conference. If any changes were being made, anything on QE tapering has been announced, then likely that the journalists, okay, the reporters will be probing into why such decisions will be made and things like that, okay? Why is the central bank sending out these messages and things like that? Even if the central bank were not to say anything, okay, if let's say suppose the central bank were to say that we're just going to adopt the wait and see approach, okay? First, no tapering announcement will be made this time around, all right? Then expect reporters to be grilling Powell on why. You guys are expecting QE tapering to take place this year, okay? Do you guys think that you guys can make it in time for a tapering this year? And if not, when will the first tapering be taking place? Okay, so such questions, answers to such questions will definitely lead to volatility in the market, okay, in USD, maybe even for the yen pairs, okay, because as we know, when we trade yen, it's more of a safe haven currencies, okay? So whatever decision, whatever words, sentence, meaning, messages coming out from the Jerome Powell's mouth will actually, lead to a change in market sentiment, okay? So with that, let me check if there's any questions. Rents. How will Evergrande situation affect TG? Sorry, what's TG again? Can somebody guide me on what's TG? Trading. Okay. Anyway, basically, how will Evergrande situation affect the market? Okay. I'm not sure if you guys actually, I think it was a couple of hours ago that there was a news on Evergrande, breaking news being released that Evergrande will actually be paying interest back to whoever they owe interest to, okay, starting from tomorrow, okay, and so there is actually an ongoing negotiation with the debtors, okay, on how much interest should be paid and things like that, okay. So that was actually a positive, okay, optimistic, I would say view, okay, maybe news, okay, breaking news. Optimistic breaking news coming out from the news agency, okay? So that actually led to if you guys look at a chart, okay, it actually led to a strengthening in currencies, okay, against the safe haven currencies such as the Japanese yen, Switzerland francs, and the US dollar. Specifically Australian dollar, okay, because like I've mentioned, I think I talked about it yesterday or a couple of days ago that there's a direct relation to what goes down in Evergrande, okay, to how the Australian dollar will respond, okay, because of the whole iron ore issue, okay, this whole Evergrande issue leading to property markets having in China, okay, property markets in China getting affected, then that may actually lead to a lower construction activities in China, all right, hence lower demand of steel, hence we need iron ore to manufacture steel, okay? Lower demand of steel will lead to lower demand of iron ore. And we know that Australia is the largest exporter of iron ore and China is the largest importer of iron ore, okay? So, this whole issue will roll and roll and roll, eventually leading to a decline in revenue in Australia, okay? Coming from the exporting of iron ore to China, okay? So if you guys, want to trade this whole thing, then, well, personally, I'll pay attention to Australian dollar, okay, because it is directly impacting Australian dollar, right? So with this good news coming in, we may be seeing a short-term strengthening of the Australian dollar. Personally, I wouldn't trade it, all right, because I'm not sure what's going to happen tomorrow. Nothing to do with the FOMC, but it's more like, is there going to be any more change to the Evergrande saga, the Evergrande drama and things like that? Are they going to say like, you know what, we are just going to hold back on the payment of interest to the debtors, okay? If they're going to do something like that, then, we are likely going to see another weakening of the Australian dollar, okay? So I think I went a bit off track. So yeah, if you guys are trading the FOMC later on at 0-200, just pay attention. It's going to be a roller coaster. It's going to be a roller coaster. All right. So with that, I will update you guys again tomorrow. Yeah, tomorrow on what went down, what will happen. Okay, during the FOMC meeting. Okay. With that, I will hand it back to Scott.